Rachael, the board chairman of the Uganda Securities Exchange, notes that increased cash flow during elections enhances market liquidity, benefiting the economy. However, it may also lead to excess liquidity, putting upward pressure on inflation.
During periods of the election, there tends to be an increase in the liquidity on the market, and that could trigger a little bit of inflation.
In an election year, market prices adjust for election risks, affecting exchange rates, stocks, bonds, and real estate. As land and building prices may rise, traders should be cautious to avoid overpaying for assets amid potential volatility.
These risks have been written into the market, into the prices, and therefore when you're trading, you should be careful that you're not overpaying for an asset now in order to hedge yourself during this period.
Dr. Adam Mugume, the Director of Research at the Bank of Uganda, says the central bank is prepared to manage inflation during and after elections. He notes that election periods typically impact economies worldwide, affecting both developing nations like Uganda and developed countries.
We have sufficient tools and buffers to maneuver through the election. And I think election, by the way, it is not a Ugandan scenario alone. It is cuts across. Remember when USA was going through an election, the global economy was on pause. What next? The same story happens in all economies. The question will come, what are the new policies that can come about? Who is likely to win? Who is likely to lose? What are the repercussions of the losers and the winners? All those issues penetrate through the business sector. But looking at the history, the way the elections have come through in Uganda since 2011 and at least from 2011, I think we have managed to go through all those periods without, apart from 2011, 2012, without any serious consequences in terms of inflation. Even economic growth, actually, even when walk to work came on board, we went through all that without a big challenge. We had a challenge on exchange rate aspect, I think, in some periods, simply because offshore investors sit on the fence waiting to see what is likely to happen. But again, monetary policy manages that. And also fiscal side, fiscal policy also comes in.
But Byarugaba urges investors to diversify their investment portfolio.
Do not put all your eggs in one basket. Real estate is great, but please try and diversify. Get a bit of bonds, get a bit of equity in your portfolio. In an election year, there's a possibility, there's a high risk of inflation, and therefore you do not want to have a lot of your money in a bond because that is directly hit by inflation. You would like to put a little bit in real estate, but also into equity so that you can cover yourself, so that you're not caught with your pants down.
The 2011 post-election inflation that threatened the economy, causing protests, violence, and deaths, was a clear reminder of the volatility of the economy. However, the central bank has assured the country that all will be well. Only time will tell. Rachael, Nabisubi, NTV Business.